for the smoky,
Look at it.
strip malls of the Central Valley.
We have made it sort of out of the smoke all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. So we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines.
And have you just sold them in the Central Valley or like throughout the US or even overseas, or where are they going?
Yeah, so Right now, the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019?
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, and how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're gonna do more machines. One of them is actually a vineyard sprayer, so
Okay.
vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello,
Hey Danielle, it's Aki.
come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LQ.
Can I take her out for a spin?
Please.
LEQ. Tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LEQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month. How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating. But at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LEQ,
Yes,
schedule a doctor's appointment.
no problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more because she understood the fact that you need to run after your dreams and work really hard no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. am using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
if you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point, because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channel. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. Boy, have I missed all of you, and I have missed Maddie Mills, who is back in the house. Welcome back, kiddo.
Thank you, Carol Masser. Great to be back with you, as always.
God, and you're coming back when there's so much going on, so we've got a lot coming up in the next couple of hours. Folks, it is Monday, April 3rd, 2023, first trading day in the month of April, and coming up, we've got a bit of back and forth when it comes to the trade today. Investors digesting weak factory data, and then, of course, that surge in oil prices. So we're going to talk more, Maddie, about the trade in our cross-platform countdown to the close. We'll get to that in just a moment.
But of course, we have to start with Bloomberg's exclusive with St. Louis Fed President Jim Bullard on inflation and that surge in oil prices.
What a timely conversation Mike had to be able to talk to Mr. Bullard, who has been out front and center, way ahead of the pack when it comes to concerns about inflation. So we'll look forward to that. We're also going to talk about that with former Fed economist Claudia Sahm. She's going to weigh in on the macro issues affecting the economy. She's got a recession indicator. It has to do with the unemployment rate, what it is saying right now.
And then we got to talk about the volatility that is Tesla. Always a good story there.
Right? Every day, sometimes a different story.
Yep.
The shares, though, tanking today, so we'll get into that. We're also going to take you to the U.S. city that is struggling to figure out its future, and this is amid, coming out of the pandemic, people still working from home, and then, of course, oh, yeah, that old-school bank run known as Silicon Valley Bank. We'll get into that.
And, of course, then we've got to hit the $6 trillion economy that employs hundreds of millions of people that we've yet to really unlock the value of. How is that for a tease ahead? You got to stick around for that one, you guys.
Listen, this speaks to a part of our global economy that is so near and dear to me, but something that everybody should have on their radar. We say that, Maddie, in a week where we only have 4 trading days, we're going to have that jobs report on Friday, and as we mentioned right now, we're looking at a bit of a mixed market with those tech stocks seeing some pressure. We've got yields back down again, so that is really kind of our backdrop. Right now, we do want to head over to our TV colleagues, check in with Romaine and Katie, because Countdown to the Close starts right now.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go in the trading session. Romaine Bostic here alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Madison Mills in the fishbowl. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and Carol Masser.
Yes.
Even those folks streaming on YouTube.
Welcome back. We missed you. We missed you. We missed you. Having said that, interesting day. I feel like there's some forces at work on the equity trade. We'll talk about that in just a moment. But where I am seeing
and by forces, you mean like what, like Jedi mind tricks or what?
Just vibes.
All right. We'll get to those vibes in just a moment. Check out the semiconductor area. Almost all the names, I hear nothing. All the names in the stocks are lower, or almost all of them. And really, a lot of it has to do with Micron. Stocks right now down about 1 1.33%. Micron, though, down about 2.25%. China's Micron probe seen as a fresh offensive in a chip war with the United States. That's between the two. Beijing launching a cybersecurity review of imports from Micron, the largest U.S. memory chip maker. So we're seeing this battle kick up. Morgan Stanley saying, there shouldn't be any near-term impact, but we are seeing some impact on Micron shares. Intel, however, we did have Bernstein come out upgrading the stock, but they write that things may be starting to turn around for the chip maker, but you're seeing Intel just up about a hair, so kind of bucking that downward trend. And I wanted to throw in AMD because Bernstein also weighing in on that one, affirming their rating, market perform, recommending taking profits following recent strength in the stock. So, Maddie, that's down about 2%. So a fair amount of news when it comes to the chip space today.
Well, a fair amount of news on chips, but we've got to talk about oil here, Carol. Let's look at the S&P Energy Index. Energy sector up 7 days in a row, but take a look at that spike today coming on the heels of that OPEC production cut news. Analysts saying that oil could pop to over $100 a barrel. We're looking at a little over 80 a barrel for crude today. But if you look at individuals too, we've got Exxon, Marathon, all popping today on the news. The question, of course, for us, Romaine, what does this do to the inflation equation and therefore the Fed?
This is a defensive market right now, pretty much across the board here. Of course, we are seeing a big rally going on right now in the Treasury space. And as far as equities go, well, the S&P relatively unchanged on the day. It's up about 0.2%. The NASDAQ down about 0.6%, and the Russell down about 0.5%. The Dow Industrial Average, that's basically your outperformer on the day, but that's largely because of the push of some of those defensive names.
And if you look at the sector level, you have 7 sectors in the green. Unsurprisingly, you have energy right up at the top. That sector up more than 5% after a really rocky start to the year, taking back a lot of those losses today alone. And then, Romaine, to your point, you look at what's next. It's healthcare, it's consumer staples too. Pretty defensive sectors leading the charge there. You look at what's not doing too well today. You have 4 sectors in the red: real estate, consumer discretionary, big tech, and utilities.
Yeah, big tech and utilities. Of course, you were just talking about Micron, and of course the I guess overhang, if you will, still on that company. And then of course Chevron up about 4.5%, on the day. Actually up for a 7th straight day here, one of the longest runs that we've seen on a daily basis for Chevron in at least a year here. In fact, most of the energy space solidly in the green. Meanwhile, Blackstone solidly in the red right now, down about 3.6%. This on the back of the latest news here of more redemptions coming out of one of its main real estate funds. Tesla also on the back foot, down about 6% here. They did, of course, reach a milestone with regards to its deliveries in the most recent quarter, but a lot of that was done on the back of price cuts. We should point out there is a broader issue going on in the market. So much focus on OPEC plus, but there also should be focus on those ISM numbers, manufacturing numbers, and the contraction that we continue to see in the factory space. Believe it or not, that's been much more of a drag, guys, on the market today than anything else out there.
Yeah, I think that's a really good point here, that I think we are continuing to see a growing number of statistics that show that maybe we are continuing to see weakness in the economy and that's slowing down. Having said that, when Mike McKee caught up for his exclusive with Jim Bullard, president of the St. Louis Fed, he did want to ask him, though, specifically about that spike in energy prices and what it means potentially for monetary policy. Here's what Mr. Bullard had to say to Mike earlier today on Bloomberg.
The median person on the committee says a little over 5%. I'm a little higher than that. I think inflation will be stickier. We're still talking about a lot of inflation, more than double our inflation target on that basis. and oil prices fluctuate around. It's hard to track exactly. Some of that might feed into inflation and make our job a little bit more difficult.
All right, that of course is the president of the St. Louis Fed, Jim Bullard, exclusively with our Mike McKee earlier on Bloomberg. And you know, Katie, the whole point is he's still on that fight against inflation, reminding us that he was the Fed member. He's not a voting member this year, but the Fed member who really was out there front and center, raising concerns when it comes to inflation. So reminding us that we don't know what the lasting impact of energy is ultimately, but still
he
talking
was the one
about
raising those issues?
Amongst several. I
yeah,
mean,
okay.
Bullard's a big voice. And I mean, Romaine and I were having that conversation earlier that the Fed can't pump more oil. I think we landed on that, Romaine.
Yeah,
but they do have
that's a
to
bold
sort
call.
of, it's outside of the scope of their monetary policy, but they do have to operate monetary policy around potentially higher oil prices, what that means for inflation expectations, which we know they care very deeply about.
Yeah, and we know that they got a lot of good news with the PCE numbers and now the ISM number here. But I wonder to what extent Jay Powell read about this OPEC news and had a fluttering of the heartstrings over that. Does that, return or rewind the good news on PCE?
I always feel like they're always backing out, though, right? They're backing out energy.
Yeah.
They're backing out housing costs. So at this point, unless it is a sustained level, does the Fed say, listen, I think this is what Jim Bullard said, that we're going to continue, in terms of our target, that it's got to go higher from here.
Well, they explicitly, and Jay Powell's made that clear here, that they actually tried to back out all of those energy numbers because of the fluctuations. Basically, they're trying to do what they can control. When I was on vacation last week watching you guys every day, although, Carol, you disappeared for some reason.
I got, I just couldn't do it without you. I just said, I'm out of here. I'm out of here. Sorry,
I think
guys.
you were here on Monday, and then I think.
But then I realized he wasn't going to be here all week, and I was out.
Had to get out.
Just me.
Anyway, go ahead. What did you see on your trip?
But I mean, just all the sort of, I guess, machinations about sort of whether the banking crisis would disrupt the Fed. Now it's, well, OPEC Plus disrupt the Fed. Look, here's something we know to be true. In the year or so that they've been hiking rates here, they have not been sort of knocked off their pivot. And I'm not sure that this is going to be the thing that does it. It's a big deal, the OPEC Plus cuts, but this is not necessarily big enough to make them change pace. If the banking crisis wasn't, why would this be?
The message has been very clear from the Fed, from the get-go, despite some of the configurations of it. It's been very clear that they're going to continue fighting inflation. All right, guys, we got more to come. We're going to come back in less than an hour's time. Our cross-platform coverage, radio, TV, Bloomberg Originals, and of course on YouTube. We're going to count you down beyond the bell at 4 p.m. Wall Street time, the first trading day of April. So you've got your market set up. Carol Masser and Maddie Mills here in our Bloomberg Interactive Broker studio. As you know, OPEC's surprise production cut presents potentially another fly in the ointment for the Fed. Commenting on that, as you just heard, Federal Reserve Bank of St. Louis President Jim Bullard, who said OPEC's decision to cut output was unexpected and an increase in oil prices could make the Fed's job of lowering inflation more challenging. Coulda, woulda, shoulda. We shall see about that.
Yeah, and we're going to get to Bullard's exclusive comments to Bloomberg's Mike McKee in a little bit, along with the oil news and some other economic data points in this conversation. With us to discuss is Bloomberg News economics reporter Steve Matthews, joining us from Atlanta. We've also got Claudia Sahm, the founder of Sahm Consulting and a former Federal Reserve economist, an incredible guest to join us today. She's also the creator of the Sahm Rule. It is a recession indicator, and she is on Zoom with us from DC. Steve, I want to kick it off with you. These comments from Bullard in Mike McKee's, obviously an incredible interview with him. What was the main takeaway for you? What stood out to you that our listeners need to zero in on?
I would say two things. First of all, Bullard talked about inflation expectations. He said this could make the job of the Fed slightly more difficult because the worry is that if you get a sustained increase in energy prices, that would boost inflation expectations. And that is what the Fed doesn't want to see. The Fed doesn't want to see inflation expectations, run out of control. There's no sign of that right now, and this is a fairly small incremental move, so that may not happen. But the second thing I was going to point out is that the reaction of Bullard and basically all of the Wall Street economists I talked to today was very muted. It's like very much a ho-hum reaction that this is not necessarily going to be a game changer in terms of Fed policy, that it certainly incrementally, could raise inflation a little bit, but it's not really going to change the way they're going to react to things.
Well, and what is it about, Bullard? He's, when it comes to raising the warning flag, right? He's been out there front and center.
No doubt. He's been a leading hawk. He's been a leading voice. Some people think he speaks too much, including perhaps Claudia, but he has definitely been outspoken, and he is not really reacting a lot to this as well. And so certainly the doves on the committee are not going to necessarily react to this as well. If you get a big increase in oil prices, over $100, if you see a spike in gas prices, maybe things will be different. But this, from what we've seen, there's not a big impact on policy that we see.
All right, so Claudia, come on in on the conversation here. Do you agree? Bloomberg Economics is writing that $5 increase in the price of Brent so far won't move the dial much, but if it goes to $100 a barrel or above, then maybe we could be having a different conversation. How do you see the impact of higher oil prices, the significance of it?
Yeah, so I absolutely agree that this is, I even agree with Jim on this one. This really, there's not a lot here. Now, the caveat that you made was really important. If this keeps going, if we see gas prices like we saw last summer, where they're hitting $5 a gallon, that's a problem. And we remember back then, the Fed started talking about, it's all the inflation, even though we don't control it. Look at those inflation expectations. That was a justification for one of the bigger hikes. So, but right now we're not in that space. The Fed, looks through this kind of thing. It matters to people. Every little bit counts at the gas station, but it is completely in the Fed playbook not to look at this and do much, but they're going to keep going.
Well, this is the thing.
They're not deterred.
Right. And this is the thing, Claudia, that you bring up that I think is so important. When you are a consumer paying at the gas station, it doesn't really matter what the Fed speak is. You just feel like gas is more expensive. So, Steve, bringing you back in here, how does the Fed think about those higher energy prices, even when they're taking that out of the data and looking at, core housing, for example? Do they think about the data that's still impacted by those oil prices, even if it's not those exact numbers?
I think the most important thing is if you go back and look at Chair Powell's speeches and his interviews over the last several months, he puts inflation into three buckets. You have housing inflation, which looks like it's going to improve if you look at monthly leases. You have goods inflation where there's been supply disruptions in shipping, and those seem to have resolved. And then you have core inflation for services, and that's what they're really focused on, excluding housing. And that's what the focus is, because they see that being affected, rightly or wrongly, they see that being affected by the labor market, and they think that the labor market is too tight. So it's like the bucket of inflation that is really moving the Fed right now is core services excluding housing, and that's not affected by oil prices at all.
Really good point. Well, and on a day, what's interesting, Claudia, is we got some other data today, and we talked about it with our TV colleagues. The ISM, manufacturing contracting in March by more than expected to the lowest level since May of 2020. You've got the Federal Reserve Bank of Dallas reporting that demand for bank loans in its district slumping to the weakest since the spring of the 2020 COVID crisis. Do you feel, Claudia, that this increasingly is showing an economy in trouble? Mind you, we're going to get a jobs report that's going to still remind us, even if it's a little bit weaker, that we still have a tight labor market.
Yeah, so interest rate sensitive sectors of the economy are affected by interest rates. This is the first wave of this. What is going to be, it's the wild card here is we do have a very strong labor market. how much can it withstand these kind of effects? Manufacturing is not a large part of the U.S. economy anymore. But these contractions are real, and this is definitely coming from the Fed, and we've got more coming from the banking crisis. So it's really tricky. If there's a lot more coming, the labor market's only going to be able to buffer so much. Consumers are only going to be able to buffer so much, and then we are in trouble.
Strong labor market is what's top of mind for you, Claudia. Steve, what are you thinking heading into Friday's jobs report? Any insights that you have into what we might expect?
Well, there's no doubt that the economy is slowing. The Atlanta Fed's GDP now, the GDP tracker, just got cut to, I think, 1.7% for the first quarter. It was over 3% for a while.
Is that a good indicator, Steve? Because I know when I bring it up, sometimes there's folks that are like poo-poo it and say, come on, it moves around a lot.
It moves around a lot as you get close to the end of the quarter and as you get close to the actual report. It becomes a lot more accurate, and it's really more of an indicator of what's happening in the momentum. I mean, you can't really take the final number seriously until you get really right before the GDP report, but it does kind of signal that the economy is slowing from where it was before. And, you know, definitely there are a couple of things you look for. What is the payroll employment? What's the unemployment rate? And what's happening with wages? And all of that will at least influence the Fed's outlook a little bit, although, you know, the banking crisis and how that plays out will obviously be a big factor as well.
You know, we have a couple of minutes, and then I know, Claudia, you're going to come back because we want to talk a little bit more about a column you wrote for Bloomberg Opinion. But when you think about the Fed discussion, Steve, let me put this to you first. I mean, is it just, when they go into that meeting, it's inflation, 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 especially coming off the bank crisis? Because it does feel like things have eased a little bit.
You know, the interesting thing that Jim Bullard said in his interview with Mike today was that, in his view, you know, there's an 80 to 85% chance that the banking turmoil diminishes from here and becomes kind of a non-factor. And then that leaves like maybe a 15% to 20% possibility that the banking, you know, problems kind of reoccur and become a big factor, and things sort of like go out of control, and you have a major meltdown with the financial system and with, you know, with the economy.
Right.
So I think they're still very alert on that, and so long as that they see that as a big risk, you know, that's going to weigh heavily on what they do in May.
Claudia, I'm going to give you about 25 seconds, and then I know you're going to come back more. But you think, what is top of mind when the Fed goes into meetings right now? Is it still got to be inflation?
Yeah, it's inflation. I mean, I agree. They don't want to blow up the financial system, but this is all about getting inflation down, and they are not going to stop until they get there. I mean, that is their job, but they will push, and they could break something again if they push too hard.
All right. Our thanks to Steve Matthews, economics reporter at Bloomberg News from our Atlanta bureau. Check him out on Twitter at Steve Matthews 12. And Claudia's going to come back with her. Claudia Sahm, founder of Sahm Consulting, Bloomberg Opinion columnist, former Fed economist, and I want to ask her about her Sahm rule and what she is seeing when it comes to indications of a recession coming. You are listening and watching Bloomberg Business Week. It is Monday, April 3rd. Carol Masser along with Madison Mills, and this is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check markets all day long here at Bloomberg. The Dow, the S&P, they're both higher. NASDAQ in the red. Crude oil is surging. Right now we do have West Texas Intermediate crude up 6.2%, 80.38 a barrel. Treasuries are climbing as a gauge of factory activity contracted by more than expected, tempering inflation concerns fueled by OPEC Plus's surprise plan to cut oil production. Oil front and center today, oil rallying after OPEC announced those cuts. Ellen Wald is senior fellow at the Atlantic Council.
What we're seeing, I think, is actually an unprecedented level of cooperation. I think I wrote last night that OPEC Plus is now functioning like a well-oiled machine, which we definitely hadn't seen before. I mean, these voluntary cuts were put together quite quickly.
Barrel of crude oil now at 80.40, up 6.25%. Brent, the global benchmark, 84.83 right now. We've got Brent crude up today by 6.2%. Spot gold up 0.8%, 19.85 the ounce. The 10-year, 3.42%, with the 2-year yielding 3.97%. Oil stocks surging today. Case in point, ExxonMobil up 6.4%. BP, the ADR is up 5.3%. Chevron up 4.8%. Shares of ConocoPhillips, they're up 9.8% right now. Among other oil stocks, EOG Resources up 6.2%. Pioneer Natural Resources up 5.4%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on this Monday. I'm Carol Master along with Madison Mills. I want to get back to our guest because still with us is Claudia Sahm. She's founder of Sahm Consulting, a Bloomberg opinion columnist. She's a former Federal Reserve economist, and she's the creator of the Sahm Rule, a recession indicator. And she's still with us via Zoom from Washington, D.C. Claudia, thanks for sticking around. Really appreciate it. So let's talk a little bit about your recession indicator. And I'm curious what it's showing you at this point. And it relies, right, on the unemployment rate.
Mm-hmm. So it's showing us that we are not in a recession. Now, it's an indicator, right? It's not a prediction of a recession. The Sahm Rule, which is based on changes in the unemployment rate, when you've got a really small one, 0.5 percentage point relative to its low over the prior year, you're 2 to 3 months inside of a recession. So it's showing, I mean, it's zero. Yeah. It's been zero for a while, very close to it, because we have very, very low unemployment right now. But that can change, right? So it's not going to tell us where we're headed. It's going to tell us where we're at right now.
And what do you look at, Claudia, to suss out whether or not we're on the verge of a pivot and a change on that?
I do look very carefully at the unemployment rate. The labor market is extremely important in terms of the U.S. economy. For most Americans, they spend what they earn, or that's what they can spend. And so as long as the labor market is good, consumers are going to be out there spending, and that's 70% of the U.S. economy. And you can have other sectors like tech or manufacturing really hit a rough spot. That doesn't necessarily bring everything down. It's certainly not a good sign. There's a lot of weakening intentionally by the Fed in the U.S. economy, and eventually, if it keeps going, something will give, and Sahm will trigger.
Well, you know, it's interesting too, and one of the other things, Claudia, that Mike talked about with Jim Bullard this morning is this idea of, wage inflation, and that, a lot of workers have gotten increases. Bullard made the point that, well, wait a minute, that with inflation, they really haven't gotten that big of an increase. And do you agree with that assessment that, in terms of the spending power still, even if folks have gotten increases, it doesn't necessarily go as far because of the inflationary pressures and costs?
The least well-off workers, the lowest wage workers who have been left behind for decades, they are a group who their wages have gone up more than inflation. So it is true for a lot of workers, a lot of times inflation is bad, right? Like, I don't dispute that. Losing a paycheck is extremely bad. And like I said, there are groups, and particularly very disadvantaged groups, this has been good for them. They've made out ahead of inflation even.
Who are those groups that have done well?
Well, it's the low wage workers, right? That's, if you look at the wage data and not just looking at the aggregates, the total wage data, if you look at lower wage workers, if you think about in the service industry, I mean, really people who have not had much of wage gains for a very long time. I mean, these are the people that are in demand, right? So this is not surprising that they're getting the big wage increases, but that is one group where their wage gains have gone ahead of inflation. But Jim's right. Overall, that's not been the case.
What's interesting too, and as someone who has studied various economic cycles, Claudia, does this one make sense to you? And I guess I ask you with the context of, we're coming out of a pandemic. We've had a crazy amount of stimulus that has been kicked into the economy from different levels and continues to come in. And so we're kind of figuring out that reset. Does it make sense, the economic data points? No. So,
it's it's kind of an evolving thing. Right? There's a lot of discussion about, well, in the United States, we had this big stimulus in 2021, and that caused all these problems. And then I look over at Europe that didn't have, and their core inflation continues to pull up. There's so many things going on that we will eventually put this puzzle back together again in terms of the lessons. But I think, it hasn't, there's so many relationships that haven't held up that just don't make sense. But we did go through a pandemic that we have not lived through in generations. And there was a war in Europe. So there were events out in the world that were very unusual and didn't make sense why they happened, right? So it doesn't surprise me that everything is haywire, but it makes it extremely hard to look at the data, even explain where we are, where we've been, let alone where we're headed.
So I have a couple of questions. One is, we certainly have had various guests come on, especially when it comes to what happened in the banking area. And I want to get into that because you did write a column for Bloomberg Opinion on this. Do you feel like Secretary Yellen and Jerome Powell are the people to kind of carry us through and do the right policies?
They absolutely have a responsibility. I mean, Treasury and the Federal Reserve, along with FDIC and OCC. I mean, these are the bank
but
regulators.
There's responsibility, but do you feel like that they are the right people based on what you've seen to get us through?
Right people?
Yeah.
Well, first of all, they were who we got. I think,
Fair.
I think what they did, this was tough.
Yeah.
Right? I don't know that I agreed with everything that they said or did during this period, but the most important thing was to steady the ship and to come with calm and, seriousness. And I think both of them did that very well. It's just, it's hard, right? And things did calm down, but it's not like, I think Jay Powell talking or Janet Yellen talking was the secret sauce here to getting things back on track.
Well, Claudia, I really appreciate in your background that you worked in the Division of Consumer Affairs on the Fed board and oversaw the Survey of Household Economics and Decision Making. So I feel like you have the expertise on the consumer that sometimes the Fed is criticized for not understanding. I wonder what you think Jay Powell's Fed may be missing about the average American household, and specifically if you want to talk about how underbanking plays into that as well.
Right. So the piece that I wrote for Bloomberg Opinion was reflecting on the fact that over and over again, Jay Powell and Janet Yellen told us it's safe. Your bank accounts are safe. Right. And that's true. And that's the FDIC insurance. And it was good to remind people of that. And yet when I think about that, it's like, well, you have to have a bank account for it to be safe. Right. And there are in this country millions of individuals who are unbanked, so they don't have a bank account, and millions more that have a bank account, but they use things like payday loans and check cashers. So clearly they're not getting everything they need from their bank. These are individuals who are in, this is not a good financial situation that they're in. And the most common reason for not being banked is not having enough money for, the minimum requirements for a deposit. Now, one thing I would say that goes back to your question about what the Fed needs to think about in terms of its monetary policies right now. If you look at this information, I've seen this on a lot of different aspects of inequality, but it's definitely there for the unbanked. The number of U.S. Households who are unbanked right now is the lowest it has ever been. Now, the survey doesn't go back, it goes back to 2009, but it's 5 million people less than the worst point in 2011. That was a very bad recovery from a recession. Right now, we've got a great labor market. We've got, people have more money in their pockets, and you see it. It matters, and we've made so much progress, and if the Fed pushes too hard, this is what we lose.
Well, and I was going to say, just got about 25 seconds left. As someone who watches, indicators, that is an indicator of what? Again, a reminder that there are some people who are doing just fine. There's a lot of people who continue to see a lot of pressure.
Right. That's not being able to have a bank account is very basic. It's something we don't even think about, right? And so the fact that, there's 6 million people that don't have a bank account, that's a problem. We need to keep working on it. The piece has ideas of solutions. And yet the fact that this has been decreasing over time, that's one of many indicators that things are going better with this recovery.
When we talk about the underbanked, if you will, or unbanked, we usually talk about it in terms of emerging markets, but it's right here in our backyard. Claudia Sahm, thank you so much, founder of Sahm Consulting and a Bloomberg opinion columnist there in D.C. We are going to get a check on world and national news. Off to Denise Pellegrini we go in our Bloomberg 1130 newsroom right here in New York City. Hi, Denise.
Hey there, Carol. Thank you. Former President Trump has now touched down, Carol, at LaGuardia Airport. Security in Midtown and Lower Manhattan very tight. Trump's arraignment on criminal and other charges tomorrow. Mayor Eric Adams has this message to anyone thinking about protesting causing harm.
Control yourselves. New York City is our home, not a playground for your misplaced anger.
And Adams also asking Representative Marjorie Taylor Greene of Georgia to be on her best behavior if she protests. Here's what else we know about security. All other Manhattan Supreme Court cases will be on hold tomorrow until after Trump is arraigned. The courthouse completely emptied for a security sweep tomorrow. Multiple road closures expected. Watch for transportation delays. Bloomberg's Kriti Gupta outside the Manhattan DA's office earlier tracking Trump's legal response.
They're not looking to dismiss it. They're not looking to remove the presiding judge, who, by the way, has a history of presiding against the former president. President Trump even going as far to saying Juan Merchant, who, of course, is the judge presiding, he hates me.
And Gupta says Trump is expected to fly back to Florida tomorrow and give a speech. The White House responding to Saudi Arabia and others in OPEC Plus as the cartel cuts oil production. National Security Council spokesperson John Kirby telling reporters the U.S. views it all as a bad decision by Saudi Arabia, but
we're not always going to agree with everything that Saudi Arabia does or says, any more than they're always going to agree with everything that we do or say. But that doesn't take away from the fact that it is a strategic partnership. We have many things that we need to continue to work together on.
And now Kirby also says Biden administration officials knew about these cuts before they were announced. Makes you wonder when Fed officials knew about it. Global news 24 hours a day, powered by more than 2,700 journalists and analysts. I'm Denise Pellegrini. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P both higher, NASDAQ in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed right now. The Dow up 324 points. S&P's gained 13, and NASDAQ still down 48 points. The U.S. 10-year yield drops to 3.42%. Gold is trading higher by 15, and oil is climbing on the surprise OPEC production cut. Bitcoin is little change, and among the main 11 S&P sectors, leaders were energy, healthcare, and consumer staples. Real estate and consumer discretionary were under pressure, and leaders to the upside in the Dow, Chevron, UNH, and Merck, while Salesforce fell 1.6% and led to the downside. In deal news, Endeavor and WWE to combine in a deal valued at more than $21 billion. And wrapping things up, PPG gained as much as 5% after boosting its forecast. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. About 18 minutes left in today's trading session. Carol Mass along with Madison Mills here in our Bloomberg Interactive Broker studio, streaming on YouTube and Bloomberg Originals. We've got stocks just off their best levels of the session, still negative though, as you just heard from Charlie on the tech trade, the NASDAQ specifically, and yields also have moved off on that disappointing ISM manufacturing data. All right, so let's get to it. What is the right strategy in this environment? Back with us is Jimmy Lee. He's founder and chief executive officer of Wealth Consulting Group. It's an independent wealth management registered investment advisory firm, roughly $2.9 billion in assets under management. And Jimmy joins us via Zoom from Georgia. Jimmy, good to have you back. It's been a while. I think we talked to you back in January, so a couple of months. How do you describe this current market environment?
Thanks for having me on, Carol. It's been a little while, but was it really bad news? I think for the people that are hoping that the Fed stops raising rates sooner than later, it wasn't bad news. And so I think, investors are just kind of digesting the report, trying to weigh what's better, a softer economy or possibly, the Fed stopping raising rates sooner. I would vote for the latter.
Okay.
And so, I think the way to play this market is to continue to own quality companies. But if you haven't dipped your toe into growth, I think you might be losing some time here.
So energy companies then, is that a growth area that you're seeing after the OPEC news?
We have taken some of our over allocation that we had into energy off. But we still like energy. And so, yes, I think that with China reopening...
Are you bummed about that, Jimmy, considering the trade today? Forgive me for jumping in here, but are you a little disappointed thinking, or do you just feel like what we're seeing today is just going to be a temporary blip?
I think it's just a little blip. And I actually just was at a big conference in Las Vegas where, a lot of companies that are buying heavy equipment, that is building... the United States and as well as the world. It was a very busy conference with a lot of activity, a lot of economic activity. Certain companies that I won't mention the names of were selling through end of next year. And so I think that manufacturing will get back on its feet. I think we're starting to see the signs of, higher rates weighing in on everybody, including business. But I think the consumer is still strong. We'll get tested more this summer. Still spending money everywhere I go traveling, I was in Europe a few weeks ago. It seems pretty busy over there too. And so I'm fairly bullish still and optimistic on the economy not going into a recession. And that's my base case so far.
When you talk about this conference, and I know you maybe can't get into too many specifics, but are you talking infrastructure play or just anything that plays to an economy that, as you said, doesn't go into recession? And when you say no recession, just the U.S. or globally?
I'm thinking the U.S., but yes, some of the money that is going to be given to the companies that are in the infrastructure industries, I think, are benefiting, and you're starting to see the effects of that in the business real time. And so, yes, a lot of the companies that are involved in the ground up from the very beginning of digging holes to constructing buildings, right, or redoing bridges or whatever. And so I think we're starting to see that. And like I said, while we're still cautiously optimistic and we like quality growth, we think that the run that we've seen so far, and most people are still very negative amongst very smart investors. And I think we'll start to see more volatility because of that. So selling into the rallies wouldn't surprise me at all. But I think this year would be more about buying into the dips.
But you mean volatility on the equity side? Because we've certainly seen the volatility on the Treasury side.
Sure. And, we're actually bullish on bonds, too. So this is a unique year that sets up where, and I think that some of the returns we've seen in the NASDAQ so far this year was just because some of those companies really took a huge hit, way more than the S&P 500 last year. And so I think you're getting to see some of that coming back. But even some financials, a lot of the whole sector got sold because of the banks. And I think there are some good buys in some financials that are not necessarily banking. But so I think there's values all over the place now. And so this year is definitely a stock picker's year.
How do you defend a bullishness on bonds given what we just saw with the banking volatility and also what we may continue to see as that consumer demand stays sticky? Like you mentioned, you're seeing it when you travel, and that could increase the Fed's terminal rate.
Yes, I just don't think that's what's going to happen. I think that maybe the Fed's got one more hike in it, and then 25 basis points, and then a pause, and they could surprise us with not raising next time. And so I think that's what's priced in so far. And certainly if they stop now, the market, I think, will rally off of that. But I still think we'll see volatility. And as far as bonds go, I would expect that the bond market is correct, not necessarily that we're going to go into a recession. And that's why, interest rates are lower on the long end, but just that the Fed might, not only take their foot off the gas pedal in raising rates, they may be forced down the road to, lower rates, maybe more so because of inflation coming down. And I know it's going to be a little while before we see that.
Yeah.
But I'm hoping we don't really see a recession and massive job losses like some people are thinking.
Jimmy, what's an important metric that you really follow in terms of trying to figure out the correct investment strategy? And I bring that up because we did get some data, I believe it was from the Dallas Fed earlier, about loan demand, and we are seeing certainly numbers come down. The Federal Reserve Bank of Dallas reporting that demand for bank loans in its district slumped to the weakest since the spring of 2020 COVID crisis. And we know coming off of the collapse of the three regional banks that we are watching what the banks are doing in terms of issuing new loans as a sign of economic vitality and activity. What is it, though, that you watch? Is there a single indicator?
I wouldn't say single, but we're watching a lot of things, and we're watching, key companies and sectors and how they're performing. I think the CEOs and CFOs did a good job coming into this year because I think a lot of people were preparing for a tough, economic environment potentially. And so I think the banks, the bigger banks were definitely shored up on capital and trying to be in a better financial position. And I think that's why we're seeing, that flight to quality as we saw with the regional banks, people pulling money out and the big banks actually turning away those monies, right? The good news is for businesses is that there are a lot of private and other types of lenders that are out there that are willing to make loans that didn't exist 10 years ago. And so, I think that the loan market's going to be robust again. And what I would caution investors, though, is to not chase those high, let's say high tech, high flying, no earnings types of companies like they did in the pandemic.
So but a Microsoft or some other big tech, just got about 15 seconds. That's okay?
Really, Microsoft and other companies like that dominate their sectors would be tremendous opportunities in good and bad markets.
All right, we got to run. Hey, Jimmy, good to get some time with you. Jimmy Lee, he's founder and chief executive officer of Wealth Consulting Group, joining us via Zoom from Georgia. Just about 11 minutes left in the trade. You are listening and watching Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. McDonald's is temporarily closing U.S. offices this week as it looks to notify corporate employees about layoffs as part of a broader restructuring plan. This, according to the Wall Street Journal, the company said in an internal email last week to U.S. employees and some of its international staff that they should be working at home from today through Wednesday so it can deliver staffing decisions virtually. McDonald's shares, they're up now by about 1%. Tesla increased vehicle deliveries by a slim margin despite slashing prices across its lineup, casting doubt on the staying power of the increase in demand that Elon Musk described earlier this year. Bloomberg's Ed Ludlow has been following the delivery story.
This was a result of price cuts that Tesla had done in multiple jurisdictions, including the United States and China at the beginning of the year. You'll remember that Elon Musk talked about demand running at twice the rate of production in those early weeks of 2023, directly stemming from that price cut. The other data figure that we look to, though, or data point that we look to, is that this was the fourth consecutive quarter for Tesla where production exceeded deliveries. Once again, Tesla talks about a high number of vehicles, particularly Model S and Model X, being in transit at the end of the quarter.
And today, Tesla shares down 6.1%. Rivian Automotive says it built 9,395 battery electric vehicles in the first 3 months of the year as the company aims to ramp up production. Rivian shares today down 1.8%. Those are the company stories we're following this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody. Carol Master along with Maddie Mills. As you know, Tim is on leave. In a couple of minutes, we'll head over to our TV colleagues, talk about the market close here as we see the S&P and the Dow in the green, NASDAQ trying to do it, but still down about 30 points. Having said that, two stories on our radar, so we wanted to bring them to you. One has to do with Google now offering a price guarantee feature for flights. So it's basically if there's like a flash sale, right, that comes across and you get some good deal, Google is basically going to guarantee it?
Yeah, they promise to monitor prices daily and pay the customer the difference if their fare drops at any point from the booking process to the departure. That feels crazy to me.
That feels like jumping the shark. And are you afraid of ChatGPT?
Wow. I mean,
sorry.
That's the
opinions
smart
are my
take.
own.
That is a really smart take, Carol Master.
No, I don't know if it's a smart take, but that's kind of wild.
Because I mean, I feel like you're an organized person. You probably book pretty early, right?
Have you seen my desk?
But
everybody in that control room's like, Mills, have you not seen Master's desk?
Well, we're in
anyway,
news, so we can only be so organized.
True,
but you know, that's a lot of money they could end up selling out to people. I don't know.
It applies mostly to select U.S. flights on Alaska, Spirit, and Hawaiian Airlines. International flights originating in the U.S., such as on Canada's WestJet, can also be found, at least for now. So it does sound a little limited, but wow.
And you've got to book through the Google platform as well. So that's another key. Yeah, exactly. Exactly. Keeping us on the platform as always.
Absolutely. Trying to make it as sticky as possible. Real quickly, and Maddie and I were just musing off air about how this is probably a story we really care about as journalists, but probably most of the world doesn't. But New York Times and Elon Musk having another spat, if you will. Yeah, and this has to do with the Twitter verified badge because the New York Times has lost its Twitter verified badge. That's basically, you have your name and you have a little blue check that says, Maddie Mills, you're Maddie Mills.
Yep. And yeah, New York Times losing it. I mean, a lot of people who we follow very closely, including our own Joe Weisenthal, lost his blue check mark. So it's happening to a couple of different individuals. I know Carol and I still have ours, so don't worry, everybody. But I mean, we'll have to see.
But we do it so that you know that the person who's tweeting is really the person. There's a reason why we do it that way, or at least Twitter has done it that way. So TBD on that one. All right, folks, just about 2.5 minutes left in today's trading session. We're heading over to our TV colleagues because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down. to that closing bell. Here to help take us beyond the bell, it's a global simulcast with our best friends, Carol Massar and Maddie Mills. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and those folks still streaming on YouTube. The Dow up 1% on the day, Carol.
Yep.
The S&P slightly up. The NASDAQ, though, as well as the Russell 2000 remain on the back foot.
But NASDAQ well off its worst levels of the session, really trying to get there in these last few minutes of trading. Having said that, just looking at the S&P 500, we know one of the big stories, market stories today, is what's happening in the oil markets because of that surprise cut by OPEC. If I look at the S&P 500, top 10 names in it, no surprise, they're all energy, Marathon Oil at the top there, Maddie.
And then the big question I have, if oil does hit $100 a barrel, what does that do to the Fed? Jay Powell's sloughing this off. Bullard also saying maybe there's a little bit of concern there, but it seems like from what the Fed's done previously, Katie, they're not too concerned about the energy space.
Well, a point I just made to remain too is that at least in the equity market, this huge rally that we're seeing in these energy shares, it's coming on pretty light volume. You look at the S&P 500 right now, trading volume down about 15% or so versus its 20-day average.
It's been light for a while, right?
Yeah.
Yeah, I remember we had a down open here. I mean, we opened in the red here for the major indices, and of course, we did see the S&P punch into the green, and it looks like it could potentially close there. But you look at sort of what's being bought. It's not just energy, but it's healthcare. There's a lot of defensive stocks out there that I think people are gravitating right now, and maybe that's a reflection also of what we're seeing in the Treasury market as we continue to see people pile back into Treasuries, both on the short and the longer end of the curve. We do get the closing bells in New York, about 300 points higher on the Dow Jones Industrial Average as we wait for these numbers to settle. Either way, that's going to be good for about a 1% gain on the day. The S&P 500 up by about 15 points, or about 0.4%. The NASDAQ Composite lower on the day by about 30 points, or 0.3%. And the Russell 2000, which have been flirting with going into the green, looks like it's just going to miss that, closing basically unchanged on the day, down only about a point or so.
Yeah, and you know what I want to say is Claudia Som of Som Consulting was on with us, and she's got her indicator that talks about a recession. She doesn't see any sign of recession, or at least the indicator is not indicating it at this point. And she said, reminding us we've got a very, very strong labor market, and this week is a lot about the labor market, Katie.
Well, before we get to that Friday jobs report, let's look at the industry groups because it's telling a very interesting story. Of course, you have energy up at the top there, up almost 5%. We all know why. OPEC Plus, surprise production cut. You can see that surprise in some of those shares. Healthcare equipment, telecom, also some of your big gainers today, again, speaks to that defensive tilt underneath the surface of this rally. And then you go down to the bottom, it's real estate, and Carol, it's autos. We know that those Tesla delivery numbers didn't quite live up to the street's expectations necessarily.
All right, so let's get to some of the individual gainers on this money. Cano Health up 47%. You're pretty much holding on to its gains of the session, jumping after former board members Barry Sternlicht, Elliot Cooperstone, and Lewis Gold formed a group, and they are agreeing to act together to pursue changes at the company that includes potentially a replacement of the CEO, sale of non-core assets, and enhancement of shareholder value. So that aggregate voting power of the group, approximately 35.7% according to Sternlicht's amended 13D filing. So we're keeping a watch on that. I love this. A case of mistaken identity continues. Republic First Bancorp, ticker FRBK, up another 17%. It had been down about 40% at its lows this month because investors continue to confuse it with First Republic Bank. So you have First Republic and you have Republic First Bancorp, which is what I'm talking about. It's now up 2 days in a row, big rally. It was up 14% on Friday, up another 17% today. So again, just this mistaken identity of getting confused with the embattled First Republic. Just want to mention casino names. Las Vegas Sands up about 2.2% in today's session, off its highs. But those that operate in Macau getting a boost today. Some data showing that the city's gaming revenue soared 247% in March, buoyed by a return of tourists from mainland China as those COVID restrictions eased. So we saw Las Vegas Sands, Wynn Resorts, Melco, a bunch of names there on the move today, Maddie.
Well, and bringing us our decliners here, we've got to start with Tesla, just dragging down the NASDAQ, closing at a little bit over 6%. This is the street's disappointment over Tesla's latest update on deliveries in the first quarter. Musk's vehicle delivery goals beating estimates, but not as much as his goal of 50% annual growth. The numbers were broadly in line with analyst expectations, but many said that investors had likely expected a little bit more here given that stock price run up leading into the report today. The big question, though, will demand be able to keep up with production at Tesla? And we're hearing a similar story from Rivian, down by about 1.6%, shares falling as much as 5.5% today after just a small beat on those first quarter delivery numbers boosting the stock. And our sources tell us that they continue to see Rivian's ability to ramp production levels as a key factor in meeting or exceeding those 2023 estimates there, and that Rivian's order backlog is going to be critical as well, because that might be sufficient to offset any recessionary headwinds. And then Katie Greifeld, I know this is your favorite story today. WWE down by a little over 2% on that big news with Endeavor striking a deal to buy the company.
The big news, of course, coming in today after Sunday was the OPEC plus production cuts. That actually should put a bid under treasuries right now, and we actually saw yields spike higher. But then, of course, well, a few hours later on Monday morning, we got that factory data, the ISM data, which showed continued softness in the manufacturing sector, and that reversed the situation. We saw yields drop all across the board, down about 6 basis points on your 2-year yield and the 10-year yield, and about 3 basis points on your 20-year yield, too, if you go out to 30 here. And it raises a lot of questions right now about economic conditions, particularly in light of the fact that we know that the Fed's fight isn't done. We know that there's still a lot of economic data, and we're headed into, well, a new earnings season that could be a little bit different, a much different complexion than what we saw for the fourth quarter earnings season.
Yeah, the bond market, I mean, it's been a puzzle throughout all of this, really since early March. I know that we aren't seeing the type of volatility that we were enjoying a few weeks ago. We're past those 25 basis point daily swings, but still you're left with a 2-year yield at 4%, the 10-year at 3.40. That seems very low relative to some of those fundamentals that Romaine just mentioned. The fact that inflation is still a problem, and the Fed has stayed committed to that messaging that they're not done yet.
Well, and this is why, I mean, I agree that one of the next big focal points has got to be the earnings and what we get in terms of commentary about outlook and the concerns of companies. Are they spending on equipment? Are they hiring? I mean, certainly a lot of the headlines would say even though a lot of them have been concentrated in the tech sector, you know, we have the McDonald's story today. Like, there's a lot of things going on. So what does the commentary from the C-suite, what kind of picture does it ultimately paint to give us an idea of maybe what the Fed can do or has to do going forward?
Well, and also what's happening with labor, Carol, as we head into Friday's jobs report. The Fed is very likely hoping for some good news for them on that, showing a little bit more weakness in the labor market to indicate that the fight against inflation is kind of creating some of that softness they're looking for.
And also interesting, too, I mean, I have a focus on geopolitics, and we don't want to get too deep into it because we know that sometimes what happens in politics doesn't necessarily affect the markets, but you've got a lot of activity involving China and Taiwan. The Taiwanese president's supposed to be in the U.S., the French president's supposed to be in China, and then, of course, there's all of the, I guess, circus right now surrounding former President Donald Trump landing in New York for what is expected to be an indictment and an arraignment tomorrow. And, of course, you know, a man that we should point out is running for president for a third time here, so it certainly matters and could certainly alter the trajectory, at least of the primary, the Republican primary here in the United States.
Pretty quick trip for Donald Trump. He's supposed to go back to Florida.
Well, you know he's got his own plane, right?
That helps, definitely.
It does. That's nice. It's a big plane.
It is interesting to,
there is no more
I've
beautiful
never
plane
seen the plane, but
it's the most beautifulest thing in the world.
Beautifulest thing in the world. I'm going to write that down.
Is this an SNL skit?
Whatever happened to Keith Murray? Is he still around?
I don't know who that is.
Okay, I didn't expect you to.
No,
but in any case,
don't you feel like the OPEC?
I just entertain.
What happened? I'm not going to even listen. What happened with OPEC? It's just a reminder. A year ago, right? The war in Ukraine. These are things that just kind of come at us from, it feels like, nowhere, and it's just a reminder that it just sometimes throws another hook, if you will, into how the Fed needs to think about policy potentially. We know they're on that inflation fight. They say it. They say it. They say it.
But it gets to the idea of what we're talking about. I think on the last one we joined you about an hour ago, and to Powell's credit, he talks about this idea of just focusing on what the Fed can control, at least what they think they can control.
Right, but as we've talked about, the Fed can't control oil prices, and Riyadh is going to do what they're going to do to protect their own bag.
I'm
here,
confused.
right?
So didn't Biden go over there and like fist bump MBS and all that? And what do we get out of that?
Not a lot.
Oh.
I mean,
it's a very complex.
And is it just about shoring up the price? You know, they're worried about the global economic outlook, so they're, doing this preemptory cut to shore up prices.
No, I think they're worried about their own economies.
Well, that's what I'm saying, right? So doing that to take advantage of it. So
especially after the Credit Suisse situation really impacting Saudi as well.
You know what we get tomorrow? Job openings. I'm curious about the job market.
I thought you were going to say more simulcasts, and I was excited.
You lost me.
All right, guys, that is a wrap. Our Monday simulcast, our cross-platform coverage, radio, TV, Bloomberg Originals, and of course on YouTube. We call it Beyond the Bell. We will see you again, same time, same place, tomorrow. Economy, and really in particular the local economy of San Francisco, or so it seems. Here to discuss the impact of the bank turmoil specifically on San Francisco is John Gittleson, one of the three authors of today's Bloomberg Big Take. It is also one of the most read stories on the Bloomberg. John is Bloomberg News real estate and investing reporter. He is with us via Zoom from LA. John, so great to have you here with us. I feel like there's a million things we want to ask you. It does feel like Silicon Valley, though, just can't catch a break.
Well, and San Francisco, even more than Silicon Valley, is in bad shape because Silicon Valley still has this sort of industrial base of tech. People are going back to the offices at Apple, Google, all the big companies, even Facebook, they're returning. But San Francisco is more sort of the squishier, softer tech firms where they're very much into remote working, like sort of the drop boxes. There's Uber, where Elon Musk cut 3/4 of the staff and did order them back, but he's not paying the rent. Did I say Uber or Twitter? Sorry.
That's okay.
And anyway, Uber's another one, but yeah, there's lots of these sort of remote-oriented sharing economy type of companies that are based in San Francisco, where they really don't need offices. And then now on top of it, you've got these financial institutions that are under stress.
And forgive me, I meant to say San Francisco, not Silicon Valley. You make exactly, it's about the city and what's going on.
But to the point, I mean, there's a reason that we call it Silicon Valley, right? It's because that is such a critical part of the San Francisco infrastructure and economy. I wonder, John, if you can talk about to what extent the lack of returning to the office is impacting that economy, and where are we seeing that impact the most?
Well, you're seeing it in office vacancies and office utilization. First of all, San Francisco is less than 50% utilization of offices average during the week.
All right, I think John.
Almost 30% offices.
Go ahead, John. Well, you froze for a moment. It's just technology. It's Silicon Valley or San Francisco heard you talking and they froze you up.
Yes.
Come on back in. Come on. Tell us about what's going on with offices in San Francisco.
Okay, I'm sorry. No. And, my internet connection is unstable, it says, sorry. So apologies for that. I'm working from home. That's a problem in San Francisco. But 30% of their offices up for lease or sublease in downtown. Before the pandemic, it was 4%.
Wow.
And the utilization, the companies that are actually, people sitting butts in desks, it's low 40%. The U.S. average is closer to 50%. In places like Austin, it's 60%. And that's Monday through Friday. So Wednesday, you got a lot of people downtown, but Monday and Friday, it's pretty empty. It's easy commuting, easier parking.
But what is the impact of that on the economy outside of the real estate sector? Like, is it people not going to get lunches anymore? Bridge that gap of understanding for me.
Sure, yeah. It's all these small businesses that are closing down.
Yeah.
Their gross receipts tax is down. They generate a lot of their tax revenue from also appraisals. Some of these buildings that are empty are not worth very much. The office buildings that have traded were for like $500 a square foot. Before the pandemic, it was like $1,000 a square foot. Same thing with real estate on residential, all kinds of transactions, valuations, they're all going down. The city has like a projected almost $800 million deficit over the next 2 years.
John, is there something different about San Francisco? Like I think about how many times New York City, which I would consider, a city unto its own, but how many times people have said, oh, it's the demise of New York City, and they did it, during the pandemic, but they've done it, several times over the past decades, and yet here New York City is. Is San Francisco going through a transition? Could something like generative artificial intelligence be the next boom for a city like San Francisco?
Well, yeah, that's, I think, definitely possible. I mean, I think the problem for San Francisco is it just got to be too expensive. And then on top of it, you have all these annoyances and aggravations. It's not a very pleasant place to be. In certain
a little bit of a freeze up.
London Breed.
There it goes. Go ahead, John. Yeah.
Sorry, the mayor London Breed put it very well.
Oh, John, hang on a second. We're going to see if we can get a better feed with you.
That was so interesting, though, Carol, what he was saying, because that's my big question is, can these startup founders even afford to live in San Francisco anymore?
Well, you do wonder if there's, needs to be somewhat of a shakeout. People talk about those people that, kind of are the underbelly, if you will, of an economy in a major city, yet they cannot afford to live there. And how can that be sustainable, or how can that be fair? And cities like San Francisco or New York City, or, pick your expensive city, these are problems that have existed not just in the last year, but for a long time.
Yeah, and a question I also had for him that you were starting to bring up, Carol, is to what extent does the fallout from Silicon Valley Bank impact the economy as well? Like how many startup founders live in San Francisco that have just kind of had a horrible economic situation happen to them, right?
Yeah, no, that's a really good point. And you do wonder the importance. This was, a significant bank, and certainly in the life of startups who either got their initial money or, and just had these long-term relationships where things became much more intertwined. Hey, we're back with John Gittleson, real estate and investing reporter at Bloomberg News, with us via Zoom from Los Angeles. John, you were talking about San Francisco Mayor London Breed. Talk to us a little bit about what she's been up to, or what you wanted to say about her.
Well, what I wanted to say is she had this great quote that we used at the end of our story where she said, "You can write us off, but it better be in pencil."
Yeah. Is that wishful thinking, or does she know something that we don't?
Well, I think she's just saying, we've been down before. San Francisco in 1906, it was totally blown away by an earthquake, leveled, and a fire. And yeah, there have been a lot of busts in San Francisco before. There was the dot-com bust, wiped out a lot of value in Silicon Valley. Financial crisis in 2008 actually was more of a speed bump because you had all this growth of tech in the region. I mean, San Francisco, the Bay Area, is a beautiful place to live. It's got great universities and colleges. It's got great health care. It's got incredible life sciences industry. And there is a lot of betting that ChatGPT and OpenAI, which is based in San Francisco, are going to generate a whole new sort of surge in businesses, a la what we saw in the early, 2000s with companies like Facebook, Google, Apple having the iPhone boost. Things like that could come back.
John,
there's a lot of innovation there.
And I do wonder about, and this is something that I think there was criticism of New York City, that it was just so concentrated in the financial space, and then other things have developed in New York City. Is San Francisco not diversified enough as a municipality in terms of its economy?
Well, that is one of the concerns, that, it's too tech dependent. And also a lot of the tech that it was dependent on is the stuff that's easy to convert to remote work. Like, I don't remember if I got cut off during this, but companies like Dropbox, Uber, Airbnb, those don't necessarily need a big headquarters and a bunch of people coding and whiteboards in the same way that a company that's developing new sort of platforms like Google
Right.
made.
I have to say, it all feels like, this reset after the pandemic as we try to figure our way forward after realizing how much we could do at home, and eventually we'll see how it all settles. John Gittleson, thank you. Real estate and investing reporter, even with the technology issues, he's incredible. He is, of course, here at Bloomberg News, joining us via Zoom from Los Angeles. Check out his story, too, on the Bloomberg about Blackstone's REIT that it has out there. We're going to get him back at another time to talk about some of the withdrawals it's been seeing when it comes to its real estate fund. You're listening and watching Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here on Bloomberg. We've got Janet Yellen making some comments about the OPEC plus production cut, calling it a very unconstructive act. Headlines right now on the Bloomberg Professional Service. Yellen saying she is unsure of the price impact of the OPEC plus move, says it is unhelpful for world growth and does add uncertainty. Today we had the Dow, the S&P both advancing. NASDAQ was lower. Treasuries rose as a gauge of U.S. factory activity contracted by more than expected, tempering inflation concerns fueled by OPEC Plus's surprise plan to cut oil production. West Texas Intermediate crude oil today did advance by 6.4%, 80.52 a barrel. Brent, the global benchmark, up 6.4%, 85 even a barrel on Brent. S&P today up 15, a gain there of 0.4%. The Dow was up 327, up by 1%. NASDAQ had a down day. NASDAQ was down 32 points, a drop there of 0.3%. 10-year yield 3.41%, with the 2-year 3.97%. Spot gold today up by about 0.8%, 19.84 the ounce. Again, recapping, turned out to be a mixed start to the first day of the second quarter. S&P up 15, a gain there of 0.4. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just want to mention some headlines crossing the Bloomberg terminal. U.S. Treasury Secretary Janet Yellen criticized a decision by OPEC Plus oil producers over the weekend to cut output, saying it was unconstructive, her word, and would add to the uncertainty overhanging global growth. She told reporters today after a speaking engagement in New Haven, Connecticut, and she spoke about this announcement, of course, after the news earlier today. She said, "I'm not sure yet just what the price impact will be, but clearly it's not a positive for global growth, and it adds to uncertainty and burdens at a time when inflation is already high." So certainly that all officials are keeping a watch on. We've also been watching shares of Tesla today. They tanked on disappointment, Maddie, over the company's latest update on deliveries in the first 3 months of the year.
Yep, this is, I guess, what happens when you overpromise, maybe. Musk's vehicle delivery goals beat estimates, slim margin, but didn't keep up with Musk's own expectations for the company. So here with more perspective on the numbers, we've got Bloomberg Intelligence senior autos analyst Kevin Tynan on the phone with us from BI headquarters in Princeton. Kevin, thanks so much for joining us here. First of all, can you just walk us through the delivery numbers in the quarter at Tesla? Because Musk was pretty optimistic back in January. What changed?
Yeah, well, so, I think the belief was that lowering prices, which they did across the board and significantly, would really drive demand. And at the time of that conference call, he talked about, orders twice the pace of production, which may have been true for the time it took him to say that sentence, but probably didn't hold up through the entire quarter. The other thing about the delivery number, about the production number that's scary is what the delivery number was, and they missed that by a lot, right? So, you can produce things, and we saw this in the first quarter from Lucid and Rivian, and even some of the individual nameplates from the legacy automakers like Mustang Mach-E, where you can produce things, but can you actually sell them and deliver them to customers? And I think that's the most intense sign that there's a demand problem, at least at those price points or with that technology right now.
Well, that's what I was going to ask you. How do you read it, Kevin, against the whole industry? Is it a macroeconomic story of people pulling back on spending on these types of things, or they're just still expensive, people want to spend, but the price cuts weren't enough? How do you kind of take the big perspective here, or the smart perspective?
Right. Well, Carol, one thing I try to not do is only look at the volume number, right? Mm-hmm. This industry forever has been about overproduce and figure out how to sell it tomorrow. And that usually meant a lot of discounting and incentives. And really, since probably late 2020, mid-21, this is a market that was very undersupplied. Prices went through the roof. So what I try to do is layer in that sort of retail revenue number. So when you look at the industry and you take 2016, which was the volume year of record, 17.5 million units, average transaction price was only $35,000. But when you look at, let's say 2023, if this is a 15 million unit market, even if it's a 14 million unit market, we're talking about average transaction prices of $49,000. So by volume, you're thinking, oh my God, 3.5 million units gone. This industry is tanking. But when you layer in the transaction price, it's actually growing.
So is that a healthy market then? Or is it, hey, good for you, auto industry, you can raise prices? How do we read it?
Right. So what it means is that manufacturers are producing the things that make them money, right? So rationalizing costs has enabled them to get out of the entry and move up segments, small compact and mid-sized cars, and now everything, we're 80% truck in this market. And so revenue and profit contribution and growth has come from that mix shift to higher transaction prices. And that's orchestrated. That's not an accident, right? Automakers want to sell what makes them the most money, generates the most cash, and that was mix shift to trucks. Now, the difference between the mix shift that we're on the verge of to electrification is that when it shifted to truck, it was instantly profitable, right? It was accretive right away. This technology, the move to electrification right now, is not profitable, or certainly not as profitable as it is to just continue to produce trucks. So we're getting this sort of constrained supply level because automakers aren't motivated by profits to shift that mix to electrification yet.
But isn't Tesla very motivated by that, at least on its effort to squeeze out competitors and kind of come out on top in the EV race?
Yeah, but the thing is, so the pure plays are obviously motivated because that's the only thing that they can sell. But, and this is why I talked about there is no price war just because Tesla lowers prices, right? Because what does Ford lose or General Motors lose by giving up EV market share? 10, 20, 30,000 units, it's a drop in the bucket to them. So to give you an example, Ford Mustang Mach-E production so far in the first quarter was 360 units, like 0 in January, 360 in February. A year ago, it was 10,000. So we're just not going to produce that. We'll sell more 150s or we'll sell 150 Lightnings, but we're going to stay where the profitability is.
So listen, Kevin, I know you can't, I'm not asking you to give buy the stock, don't buy the stock, but the stock was down 6%. Does it make sense from what you understand about Tesla and what you understand about the bigger, broader auto industry? Does it make sense for Tesla to have gone down that much?
Well, I'm not sure it was ever made sense for it to go up so much either.
Yes.
So
stock's still up 58% this year. Mind you, it got beat up a bunch too.
Yeah, there's so much in that price that is really not about being an automaker or even a tech company, how they angle it.
So when you think about, where the EV market is going more broadly, I mean, the transition's happening. The pace seems to be picking up speed. I mean, we're going to see more and more EVs sold. It's just the transition is tough for automakers when that's not where they make the most money yet.
Right, and that's been my song for years, is that, I can tell you when this transition will happen, and it's the day it's profitable, right? It's really what it comes down to. And
are we getting close to that?
Well, yeah, it's a little bit of chicken and egg, right? Because you need scale.
Yeah.
But you need profitability because what's the logic? If you look at Lucid and Rivian, both of them in the first quarter didn't make their cost of goods. They were basically producing things that cost more than they could sell them for, which is a really tough business model, and especially when you think about legacy automakers who are essentially printing money on all the internal combustion SUVs and pickups that they sell. So where's your motivation to really get behind electrification, at least from a financial perspective? I get the optics of it and the climate issues of it, but from a P&L standpoint, it doesn't make a whole lot of sense yet. And that's, I think, exactly where we are.
Right.
Do you think that any of this, though, changes when the supply chains for, like a Rivian, for example, they had previously announced shutdowns for component upgrades to the electric delivery van segment? Does their ability to ramp up production change as they figure out their supply chains and just make them more efficient, and therefore does that help with the profit equation?
Yeah, it will. And look, it helps Rivian, it helps Lucid, it even helps Tesla. But at the end of the day, for this industry in the U.S. and even globally to go from, single-digit percent adoption to 50% of sales or beyond, or whatever the stretch goals are here, it has to be the large global automakers, right? We're not in the U.S. We're not going from 6% battery electric to 20 or 30 without Ford, without General Motors, without Toyota doing it. Those, Rivian, Lucid, and even Tesla just don't have the heft to take it there by themselves.
All right, we're going to leave it on that note. Kevin, thank you as always. Really appreciate it. Kevin Tynan, he's our Bloomberg Intelligence Senior Autos Analyst, joining us on the phone from our BI headquarters in Princeton, New Jersey. Just want to mention a couple of headlines crossing. This one coming from Lisa Cook. She's, of course, a member of the Federal Reserve Board of Governors since about May of last year, saying that the Fed is focused on inflation. The job market is doing okay. She is speaking at a Michigan Ross event. She went on to say that you need to pay more attention to the credit channel, and that certainly plays into, coming off of what we've seen in the banking sector and just concerns. One other headline, the SEC said it charged Merrill Lynch for failing to disclose more than $4 million in foreign exchange fees for transfers to or from advisory client accounts. So again, looks like they're going to pay about $9.5 million in some penalties or so. So you're listening to Bloomberg Radio. All right, let's get a check once again of world of national news. Let's head to Denise Pellegrini. She's in our New York newsroom. Hey, Denise.
Hey there, Carol. Former President Trump is in New York as well, and security in Midtown, Lower Manhattan, very tight ahead of his arraignment on criminal and other charges tomorrow. Mayor Eric Adams has a message for protesters thinking about causing harm, and one in particular.
People like Marjorie Taylor Greene, who is known to spread misinformation and hate speech. She stated she's coming to town. While you're in town, be on your best behavior.
Yeah, some other notes about security as well. All other Manhattan Supreme Court cases will be on hold tomorrow until after Trump is arraigned. The courthouse, of course, will be completely emptied for a security sweep. Multiple road closures expected. Trump expected to fly back to Florida tomorrow and give a speech there to fans. The White House responding to that market-moving decision by Saudi Arabia and other OPEC Plus members to cut oil production. National Security Council spokesperson John Kirby says the Biden administration knew the cuts were coming.
As for a heads up, yes, we were given a heads up.
And Kirby also calls the production cuts a bad decision. Florida Governor Ron DeSantis asking for an investigation into efforts by Walt Disney to limit state oversight of developments at Disney World. Meantime, Disney CEO Bob Iger taking a shot at DeSantis during the company's annual meeting today and calling DeSantis anti-Florida. China criticizing Taiwan's president Tsai Ing-wen's plans to meet with House Speaker Kevin McCarthy and other U.S. lawmakers. That will happen tomorrow or Wednesday in California, and reporters asked China's foreign ministry if that means a fresh wave of Chinese military drills is coming. The ministry says China's response will be, quote, resolute. Global News, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Denise Pellegrini. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. We check markets all day long here at Bloomberg. The Dow, the S&P, they were both higher today. NASDAQ finished in the red. Treasuries rose as a gauge of factory activity contracted by more than expected, tempering inflation concerns fueled by OPEC Plus's surprise plan to cut oil production. Today we have West Texas Intermediate crude surging 6.5%, back above $80 a barrel, $80.60 on WTI. Brent crude, the global benchmark, 85.06, up today by 6.5%. Equities finished mixed. The S&P up 15, a gain of 0.4%. The Dow up 327, up by 1%. NASDAQ had a down day. NASDAQ today lower by 32 points. That was a decline of 0.3%. 10-year yield 3.41%, with the 2-year yielding 3.96%. Gold up 0.7%, 1983 the ounce. So what is ahead for the Federal Reserve? Jimmy Lee is CEO at Wealth Consulting Group, and he was our guest right here on Bloomberg Business Week.
I think that maybe the Fed's got one more hike in it, and then 25 basis points, and then a pause, and we think it could surprise us with not raising next time. And so I think that's what's priced in so far, and certainly if they stop now, the market I think will rally off of that.
Illumina has been ordered to unwind its $7 billion acquisition of cancer startup Grail by the Federal Trade Commission, an uncommon move by antitrust regulators who said the deal raises competition concerns for cancer testing. Illumina plans to appeal the FTC's decision. Its shares fell today by 1.1%. Recapping, West Texas Intermediate crude rallied today by 6.5%, 80.60 a barrel. 10-year yield 3.41%. S&P up 15, a gain of 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So an interesting story that's on our radar today about how BlackRock, United Airlines, Phillips 66, and other big companies increasingly are warning investors about risks they face from more scrutiny of their claims to fight climate change. And at least 14 S&P 500 members, including the asset manager, airline, and oil refiner, have cited greenwashing in their 10K annual report so far this year, usually as a business risk factor. And this is according to a Bloomberg Law review of company filings with the SEC. Only 5 companies in the index referenced it in 10Ks filed back in 2022. So we've seen a big increase. Maddie, American Century has done its own survey of impact investing. So let's get to it, where we find on Zoom Sarah Bratton Hughes. She's Senior VP and Head of Sustainable Investing at American Century Investments. They've got some $207 billion in assets under management, and Sarah is in New York City. Sarah, welcome back to Bloomberg Business Week on Bloomberg Radio. I always like when we talk with you to remind everybody about the distinction between ESG and impact investing, because they're important distinctions, correct?
Yes, they're super important distinctions to make. So we think of it here at American Century as sustainable investing as the umbrella term. And then underneath that, you have a spectrum of approaches. To us, there's no such thing as ESG investing. There's ESG integration, and that's a systematic incorporation of these pre-financial risks within the investment process, a very inclusionary approach, not an exclusionary approach, and we have a commitment to active ownership and stewardship. As we go across the spectrum, we refer to that as Alpha Plus, where you're trying to achieve traditional financial returns plus environmental and societal returns as well.
All right, so talk to us, because it does feel like ESG, and I know that's not what you guys are, but it does feel like all of a sudden anything that's connected with sustainability is really under the microscope right now, and that has certainly been something we've seen in the last year in a big way. So tell us a little bit about the survey that you've done, what you looked into, who you talked to, and what were the most interesting findings, and how it differed from last year.
Sure. So we did our 6th annual impact investing survey. And this year we surveyed the US, the UK, Singapore, and Australia. And this was our 6th time doing this survey, and they really came up with 4 main conclusions. One, there's a gender gap that continues to persist, and I actually think this is much more systemic beyond just sustainable investing, where you see within our survey, men are actually have stronger appeal towards impact investing compared to women. But when you really dig and peel back the onion, what that comes down to is that there's a greater number of women, particularly within the baby boomer spectrum, that really just don't even know or don't understand what impact investing is. Awareness continues to grow. However, this was the first year we did see a pullback in appeal, but it was only in the US, down about 5 points from where it was last year. And I think the other factor is that top of mind, healthcare remains the issue that is most important to Americans, whereas you're seeing other geographies where issues around climate are higher up the spectrum.
So, Sarah, that's really helpful context on who and kind of like what the demographics look like. But for our listeners and viewers who are hearing this and thinking, well, I like the idea of getting involved in impact investing, I just didn't necessarily know I wasn't involved. What is your advice to folks about where to start and where to look to get involved with impact investing?
For me, it's such a broad spectrum. So it's being really intentional about what you mean around impact. You started off talking about greenwashing and seeing greenwashing as a major risk. So really understanding and not just having investors tell you that they're doing this, but actually show you, understand what the KPIs of that strategy are, understand what outcomes they're really trying to achieve. Do they have third-party verification or a third party coming in to really get underneath the hood? It is a broad spectrum. There are a number of resources out there, whether it is by GIN, which is a major impact investing organization, or there's just a number of spectrums and areas and approaches. And you have to also understand, do you want a broad-based impact strategy, or is it something that you would like to have a thematic approach to as well? So first, really sitting down, understanding what your goals are, what your risk return goals are, no different.
Right.
But then also, what are the issues that appeal to you?
You mentioned KPIs, so we're talking about key performance indicators. So I do wonder that performance specifically, are we seeing the performance when it comes to impact investing?
So yes, done right, impact investing in our view should not be concessionary.
What does done right mean?
That's about investing for a dual outcome, both returns as well as financial outcomes. It is not philanthropy. I think a lot of times those two terms get conflated. With impact investing, it's really not about giving up return, but it's about having a dual outcome where return is as important as either societal or environmental outcomes.
So is there a general number that you can tell us that you guys have seen? What is it over the last year in terms of impact investing, what that performance has been?
So I think many people are judging the performance question because they look over the last year and you've seen a rally within value strategies. I always sort of take a step back at the performance question and say, quite candidly, I can show you a chart over any time period that shows what a certain asset class is outperforming. What we are seeing now actually is a different view of impact than we have historically with the rise of best in progress strategies. So around sustainable investing or impact investing, historically it's been sort of overweight the best in class names and exclude the negative contributors, many of those that are in more cyclical type industries. We are seeing a change around sustainable investing where we're seeing the rise in best in progress, and that's investing in some of these fossil fuel companies, that's investing in some of these heavy cyclicals that we're going to need over the long term to help meet some of these more sustainable outcomes over time and being actively invested, engaging, and really changing those businesses.
Sarah, just quickly, 30 seconds, because I'd be remiss if I didn't ask you in this environment. Are you guys seeing flows into impact investing amid the market volatility? And again, just got about 25 seconds.
Yeah, so what interesting actually in our survey, this is probably a really interesting nugget out there. We actually asked by gender who was feeling ESG impact first, the most. And it was actually the men that were feeling it the most. I do think that is because this industry has, sustainable investing industry has been long dominated by women. But we saw resilient flows within our sustainable and outcome-oriented strategies over the last year.
Interesting. All right, Sarah, great. Sarah Bratton-Hughes, she's Senior VP, Head of Sustainable Investing at American Century Investments, $207 billion in assets under management via Zoom from New York City. Carol Master, Maddie Mills, this is Bloomberg.
company news headlines on Bloomberg Radio.
It's 4:53 on Wall Street. I'm Charlie Pellet. A federal jury has ruled that Tesla owes a black former elevator operator $3.1 million for ignoring his complaints that he was subjected to racial slurs and offensive graffiti at the electric car maker's plant in Fremont, California. The jury award to Owen Diaz follows a 5-day damages retrial for the ex-contractor back in 2021. He won a $137 million verdict, one of the largest jury awards in U.S. history, in a discrimination lawsuit by an individual. Tesla, meanwhile, increased vehicle deliveries by a slim margin despite slashing prices across its lineup. Rivian Automotive built 9,395 battery electric vehicles in the first 3 months of the year. And with more on Rivian's deliveries, here's Bloomberg's Kimberly Adams with this update.
Charlie, the output was above the average 8,752 estimated by analysts. Rivian, which makes 2 consumer EVs and a delivery van for Amazon.com, one of its biggest investors, delivered 7,946 to customers in the first quarter. The Irvine, California-based company was seen as a leading challenger to the EV market leader Tesla after a blockbuster 221 listing. However, its first year of production was marked by multiple setbacks, including missed targets due to a supply chain crunch and a sharp drop in its shares. Last month, Rivian said it expected to build 50,000 EVs this year, a figure the company reiterated today. Charlie?
And that's Kimberly Adams today. Rivian was down 1.6%. Those are our company stories this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everyone, we've got more Business Week to come, but first up, let's get a check on the latest world and national news with Denise Pellegrini in the Bloomberg 1130 newsroom here in New York. Hey, Denise.
Hey there, Maddie. Thank you. Security in Midtown and in Lower Manhattan, as you can imagine, very tight right now, Maddie. Former President Trump in New York City ahead of his arraignment on criminal and other charges tomorrow, and Mayor Adams says tomorrow could be a gridlock nightmare.
If you usually drive, we're staying and take public transportation. It is easy to get around on public transportation because we expect some disruptions and additional traffic. There's a great deal of additional traffic that may come in the city.
Security also extra tight, as I mentioned. Manhattan Supreme Court already tight down there. All other cases there will be on hold tomorrow until after Trump is arraigned. And then the courthouse will be completely emptied for a suite. And Trump is expected to fly to Florida tomorrow and give a speech after his arraignment. The White House responding to Saudi Arabia and other OPEC Plus members cutting oil production. National Security Council spokesperson John Kirby tells reporters the Biden administration knew the cuts were coming, but Kirby wouldn't say how that might change relations between the U.S. and Saudi.
We clearly have not agreed with everything Saudi has done or said any more than they've agreed with us on everything we've done or said. We're focused on moving ahead. And as we do, we will constantly look at that as well as any other bilateral relationship.
And Kirby also does call the production cuts a bad decision. President Trump speaking at the Cummins Power Generation plant in Fridley, Minnesota today, the president touting his renewable energy tax credit bill.
All these investments mean that now if you grow up in Minnesota or you go to a school in Minnesota, you can stay in Minnesota.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Denise Pellegrini. This is Bloomberg. Carol and Maddie, back over to you guys.
All right, Denise, thank you so much. Carol Master along with Maddie Mills here in our Bloomberg Interactive Brokers studio. Just a reminder in terms of how we finished up the trading day, an interesting one in a week that's full of a lot of economic news, including several reads on the labor market, culminating Friday in that monthly jobs report. Having said that, S&P 500 finishing up almost 0.4%, pretty much just off its best levels of the session. Dow up almost 1 full percentage point. NASDAQ definitely finishing off its lows today, but down about 0.25%. And we did see yields back off on that disappointing manufacturing data. Having said that, a story that is among the most read on the Bloomberg, you put Leonardo DiCaprio in a headline, and yeah, folks are going to be reading about it.
Of course. I mean, this is Leo DiCaprio testifying Monday at the trial.
Not a movie.
Not a movie. This is real life, folks. This is real life. And this is the Grammy-winning member of the Fugees involved with the fugitive financier Joe Lowe. We've talked about this before. Really interesting.
Great story that was in Bloomberg Business